Good afternoon and welcome to our last webinar on our North Dallas Rental Fund. It closes in early February, which means that if you still want to invest in this fund, you're going to need to be able to get on it soon because you've got paperwork to fill out. You've got to prove your accredited investor status, which just go to verifyinvestor.com. But there is time that it takes to get in. So if you've been on the sidelines, kind of just wondering when the last minute is to get in, it is now. And we're going to give you an update. A lot of people were kind of on the sideline. They wanted to see how the fund performed. We're going to be going over that today. We're still performing, shall we speak? What, Leah, you just bought some like Friday or something? Yeah. So we're still in acquisition mode until the fund closes out, and then we will be giving an update on all that now. So if you've been curious, now is your chance to get in before we close. And this is a closed fund, which means that after February 11th, we cannot accept any more investor funds. All right, so Leah, I'm going to kind of hand over the beginning of this webinar to you because you know the area like none other.
So before I get started, this is not an offer to sell or a solicitation of an offer to purchase securities. All the information that you're going to want about this fund, the specific details, the financials, all that's in the PPM, and you can find that on the website, and we'll give you all that information at the end today. Just remember, all real estate is subject to potential loss of investments, and so you want to make sure you do your research and you understand and consult with those around you like CPAs to make sure this is a good investment opportunity for you. So this is available to accredited investors only, and there's quite a few criteria to be able to meet that, but the two big ones are a net worth of over $1 million, and that excludes your personal residence. There are ways to use that, of course, though, like we have clients who will go do a cash out or a HELOC and pull the money, let it season. So there are ways around that, but if you just have a lot of equity in your personal home, that's not going to count. Other than that, you can have income as an individual over $200,000 or combined with a spouse over $300,000, or there's certain securities licenses that you can hold, and those really aren't that difficult to obtain, so that might be an option for some people, but those are really the three main thresholds to be able to meet accredited investor status.
If you only have to meet one. Yeah, only have to meet one of those, not all.
Yeah, so if there's some questions you have about that, I would recommend you can reach out. We're happy to discuss that with you or talk to your CPA. So I'm going to start with just a little bit of high-level overview of what's going on in DFW. I have some really exciting market news to share and also just talk to you about what we're seeing so far. If you haven't been paying attention to the news, the real estate market's heating up very quickly, and there's a lot of reasons for that. And that's really a nationwide thing that's happening, but of course it's heightened here in North Texas. So when we say DFW, we're talking about this broader area of North Texas. So if you look at this chart on the left here, you'll see our population growth. A lot of people think that our growth has really just been the last few years, and it's not true. We've been in this heavy growth phase, not only for jobs, but also people for the last 50 plus years. And it's just been exacerbated by what's going on with the mass exodus from California and New York and the big kind of spotlight that's been shined over North Texas with our economy right now. So you can see the steady growth, and what you can see is what's projected here through 2045. So right now you'll see by 2035, they're anticipating we're going to be up over 27% from 2020. And by 2045, we're going to be up almost 50% from 2020. So massive, massive growth. What that means is by 2045, we're going to need almost 1 million single family homes, almost 620,000 multifamily units, 309 million square feet of industrial space, and 121 million units of office space. So astronomical needs in a time where we are just not building enough homes, and that's been a problem for over 40 years, and specifically in the entry-level home market. So as you know, or hopefully you know by now, North Texas is the 4th largest market in the United States, soon to overtake Chicago for number 3. And we are now slated to overtake both New York and Los Angeles by the year 2100 to be the largest metro in the entire United States. So why are so many people coming here? It all boils down to economics. It really does. And when you look at this chart here, what it's telling you is the cost of doing business and the cost of living. So where you can see the average is 100, you'll see that DFW is the only large market that is an affordable market, which what that means is it's cheaper for businesses to operate, and they can pay their people less or the same, and they get to live better because the cost of living is so much lower. So this is one of the big issues happening in markets like San Francisco and LA and New York. These areas areas are just too expensive to operate in and too expensive to live in. And so Texas uniquely has both of those benefits for them. And what's interesting is our affordability is still very good. Our average home price is still under 400,000, which of course I believe is significantly undervalued and just poised to just go insane. I tell people we're going to be little LA before too long, but really that's what's happening here. Now, the question is, why have prices remained low? And so when we look at this graph here, this map is showing you density of relocation. So the darker the color, the more people are moving there. What you'll notice is unique about DFW compared to every other large metro is we grow in our suburbs. And so that means we have a lot more land mass opened. We have a lot more highway interconnection. So people can live in a lot more places, work in a lot more places, and still have a shorter commute. And that's, of course, on top of all the other benefits that North Texas has done, like keeping traffic patterns down, adding the tollways and the highways, where you pay based on usage and based on traffic patterns, where quite literally in rush hour, you'll pay more to go on a highway that has less traffic in certain lanes. So a lot of things that happen in our market that are quite unique, but the big takeaway here is the growth that we're targeting, these areas where we're seeing the incredible changes, it's in these outer suburbs, not in the inner cities. And that's a really important piece, because when we talk about where we're buying and where these employers are coming in, you're going to see these same patterns exist. So by the numbers, we are the #2 market rated for pent-up housing demand. Of course, this is no surprise, something like 14 million home buyers sitting on the sidelines nationwide waiting for rates to come down. Our job growth numbers are incredible. We're up almost 5%, and this continues to climb. And uniquely, although 50% of the inner areas like Dallas and Tarrant County are renters, anywhere between 49 and 60%, across all of our renters, over 20% of them can afford to buy homes. And so the cost of living affordability is still very good here. And so what we believe is going to happen, and what we're already seeing start, is as rates come down, these buyers are coming off the sidelines in a market that already has a housing shortage of over 80,000 homes. And that's just getting worse because of lack of building, lack of construction, lack of land, a lot of reasons. And of course, shortage in trades. There's just not enough people to build what's needed right now. And so the areas that we're targeting are having even higher job growth, which means even higher issues with housing inventory shortages, and I'm going to show you what that looks like. And one thing I want to talk about is the resiliency and the diversity of North Texas, because there's a lot of markets that will do well, but they're very structured into certain economic sectors. So maybe it's just oil and gas, or it's just energy. And DFW is completely resilient because of its diverse and just very, very wide economic areas. And so you can see here that the growth is pretty much everywhere, and it's been happening all the time. And so this is really unique, because what it means is that if one little area suffers, DFW is not crashing. And that's important because there are other markets that don't look like this. There's a lot of markets that might look good, but it's all auto manufacturing. So, you know, when cars struggle, well, that area struggles. DFW is extremely diverse. And that is just because of the sheer number of companies located here, over 10,000 headquarters here, and also the number of businesses coming here. So 2 major developments in these areas that we've been targeting. If you haven't heard me talk about Grayson County, I'm going to talk about it a little bit. If you've heard me speak before, you know Grayson County is where I believe it's at. And I certainly have put my money where my mouth is. That's where about 80% of my portfolio is. So 2 huge developments in the last 30 days. They actually came just 3 days apart from each other. It's almost like one came out and they're like, all right, we're not waiting any longer. So Hard Rock, huge development coming in, and Margaritaville, huge project coming in, both of these on Lake Texoma. And so we'll start with Hard Rock. This is coming to Lake Texoma. It's almost 200 rooms, 25 suites, 18,000-foot conference center. This is going to be just massive development, 18-hole golf course. They're going to have a water park, Oasis Spring, all sorts of events that are going to be held in these venues. It's creating alone over 9,000 jobs. Now, I want to remind you, Sherman, the kind of center, the epicenter of all of this, only has 45,000 people. So when you look at 9,000 jobs being created with one development that's 10, 15 minutes away, this is massive, massive news. Over $1 billion investment, and they have about 7 million visitors that come to this area. Of course, we've been talking a lot about this high dollar kind of unique recreation things that we thought were going to start coming into this area to entice and to draw and to give things to do for all these people coming in with the 6-figure jobs. This is exactly what we're seeing. They know their market metrics. They know what they're doing when they scope areas, and they're trying to get in at the early end. So this is a massive, massive project on Lake Texoma. And then the even more exciting news that is actually in the city of Denison is this new Margaritaville resort. Now, this is part of a $6 billion development in Denison on Lake Texoma. It's one of the largest, I think the largest land deal in Grayson County history. It's about 3,114 acres that were sold. This will have over 250 rooms. It's going to create hundreds and hundreds of jobs just in the hotel, thousands across the entire development. It's a $100 million development in Margaritaville itself and $6 billion across this entire area. So they're building luxury homes, luxury multifamily, lots of commercial shopping, all those things that we talk about when we talk about expendable income from people that live here and moving here. So there'll be thousands of square feet of retail and restaurant space, and they're groundbreaking this year. They're not even waiting. Where they're going to find all the workers to do this while TI and Globotech and Finisar are pulling them all, I have no idea. My guess is that they're going to bring some in from Oklahoma, but yeah, they're about to break ground here. So this will be up and running very soon. So just incredible, incredible news. And these are, you know, when we start hearing B's, you know, billions, that's a pretty incredible sign of what's to come in an area. And so this area is just booming. Q4 numbers just came out for end of 2023 for Sherman, and Sherman itself added over 1,400 jobs in Q4. Keep in mind that all of the new developments for TI and Finisar and Globotech, none of those are online yet. The first factory for TI is not coming online till end of this year, and so that hiring has not begun. This is just natural growth in Sherman because of the incredible things happening there. And so when we look at a percentage basis, and this is before, you know, the 10,000 some odd jobs coming from those 3 programs that are coming in, this is just incredible, absolutely incredible. So they actually just won an award based on job growth. And, you know, Sherman Denison, that MSA has been one of the top 10 growing MSAs for many, many years. So again, this is not brand new. We knew this was coming. We didn't understand the magnitude that was coming. I've been out there talking about Grayson County since 2015. Even I had no idea this is what we were talking about. And then, of course, we look at economic numbers of what the market's doing, and housing market is really showing the same signs that you would expect for something like this. Sherman, Texas median home price is up over 11% since December of 22, in a time where most areas have had stagnant or minimal growth. And days on market to close is only up about 30 days for off season, which is pretty normal for off season. So we still are in a seller's market because of lack of inventory. You know, a healthy market is somewhere around 5 months inventory. We're nowhere near that. And DFW as a whole is still under 2.5 months. So pretty incredible things happening here. So whether you call it Silicon Alley or Silicon Prairie, this is the new Silicon Valley. We are just getting started, and it's really incredible to see what's coming. So we talked before on previous webinars about how we had all these projects coming in. Well, that was before the CHIPS Act actually awarded the tech hubs. And so now Sherman Denison, this Texoma corridor, as they call it, has formally been awarded one of the upcoming 31 hubs. And so that means there's now another $40 to $70 million in grants available, plus the Texas CHIPS Act, which has even more funds available that is not a part of these development projects. So I anticipate we're going to see more announcements coming from other smaller companies and other companies in the coming months. So on the national level, as you know, that CHIPS Act was $280 billion to be allocated. And so they just announced those 31 areas end of 2023. And then on the state level, that's $1.4 billion available. So we're talking a lot of money for this chip manufacturing, which right now the kind of hub of that nationwide is Sherman. So Texas Instruments, this is a 4-factory development project. The first factory will be coming online end of this year to beginning of 2025. That's a $30 billion investment, almost $300 million in tax revenue, and they're anticipating that they will be producing chips by 2025. Globotech, this is semiconductor manufacturing as well. They are a $5 billion investment. That alone is 1,500 jobs. That's up to about $240 million in tax revenue. And then finally, IIVI, which was previously Finisar, they do all the Apple Face ID technology. It's more than just chips that are up there. There's tons of employers up there, even food manufacturing, distribution. But this is a big one because they originally got their massive grant from Apple. They got another grant from Apple, and now they're going to build a new factory, a new facility, and that's going to be another $3 billion or more investment. And they got $1 billion in grants from Apple. So they'll be starting construction sometime next year. I anticipate they're waiting for some of the construction crews to free up from what's happening at Texas Instruments and Globotech. If you drive by, it's just minutes upon minutes down that highway of looking at what's happening. So just incredible stuff. So currently, Grayson County overall is up 61% from pre-pandemic prices. And because of that tech sector boom, they anticipate population is going to double in Sherman over the next 5 to 10 years. Interestingly, in Denison, they have two separate developments. The one that I talked about a few months ago that's up on a private lake, and then the one on Texoma that was just announced for the Margaritaville development. Both of those are anticipated to double the population of Denison. So what's interesting is we might see a 200% increase in the population of Denison in the next 10 years. I talk a lot about how Sherman is kind of your business hub and Denison is Mayberry. So a lot of people are opting and will want to live in Denison because of a lot of things it offers. Kathy loves to tell the story when she lost her wallet and an hour later it was still there on the park bench. That is Denison. So just an incredible area.
I think it was several hours later. Like that wouldn't happen in California.
No, it wouldn't happen down where I live either. It's just, it is literally little Mayberry. And so
Yeah.
this is just an example of some of the employers in this area, because I want you to understand it's not just chip manufacturing. This area is already a business powerhouse. But what's happening is because of the natural resources, the prices, a lot of factors that go into this area, the fact that TI was already up there, it is becoming the new chip hub. And of course, to build these chips, they need lots and lots and lots of water. One thing that Texas has in abundance, specifically underground, and Lake Texoma is a massive reservoir, one of the largest in the nation. And so anyway, that's a huge part of why they're selecting this area, is because they need that natural resource. And what's great is they know they're not going to be able to hire all these jobs, right? You've got a city of 45,000 to city of 20,000. Where are you going to hire 10,000 people plus another 9,000 people? Where are they going to come from? Well, we're going to have to educate them here. So they've partnered with the local schools. They have a massive STEM center that's coming in and that now is active in the high school in Sherman. They have semiconductor institutes, educational partnerships. So we are educating our own people to come and work these jobs, not just bringing all the jobs in from other states. And so this is huge. This is an example of what that high school looks like. You know, Texas is big on these big, expensive schools and big stadiums, but anytime we see these coming in, we know what this means is big STEM and STEAM programs, which is great. So in Grayson County, we've got the Semiconductor Tech Hub. We've got the Sherman Mall, which has been pretty much empty, like most malls in these days. A huge $20 million venture to bring this back into modern times. Big grant for Workforce Solutions, another employment type situation where they help people find jobs. And it's really just all of these things happening tell you what they're looking for. They know they're going to need to have companies to find jobs and groups to find these jobs. And so they're putting the money where they need to, so that we don't have all these jobs come online and no one to work them. Airport expansion, the North Texas Regional just got a $4 million grant. We know there's going to be another airport up north. What we don't know is where. Could it be the McKinney Airport? Could it be the regional airport? We're just not sure which one's going to get these big contracts. But what we know is that our two current airports are not going to be enough to service our northern areas. Our access to the major interstates, the change that's happening right now through Sherman to turn 75 Central Expressway into I-45, a lot of things happening for distribution channels, which is another part of why these companies are picking this area. The new Sherman Beach Club, so this is that big lagoon that's going to start this year. It'll be operational in the next 2 years, another huge development. And as I mentioned, that 75 construction project will turn 75 into 45, making it a direct thoroughfare for distribution channels, for them to get their supplies. And we anticipate, and Denison is banking on the fact that we're going to be getting the suppliers for these businesses, so those will be companies relocating here soon as well. And then, of course, Collin County, due to the south where I live, where most of you, if you live here, probably live, these are the areas where you hear names like Plano and Frisco and McKinney, your really, really popular, richer areas. They have tons of things happening too. And so, of course, a lot of that growth bleeds into Texoma and also creates kind of the infrastructure to allow Texoma to grow. Things like what's happening with the 380 bypass project, things like what's happening with the airport expansions, the tollway expansion. Dallas North Tollway is actually the main tollway that goes north and south through town. They're actually redirecting its northern expansion over to the east, so it's going to come into that Sherman-Denison area instead of going straight through by Gainesville up to Oklahoma. And so even that west side of town will now be connected to the east side of town going north. So just incredible, incredible things happening. I cannot state it enough, and we are just getting started. So as I mentioned, Denison is going to be targeting these suppliers of major companies like Texas Instruments and Global Wafers. They've actually been marketing this. They put aside 215 acres with business parks and industrial parks to do so, knowing that these smaller companies are going to want to have a place here for cheaper manufacturing and distribution. And again, just going back to the diversity of this area, this is the pie chart of the different types of employment in Grayson County. You will see how diverse even this suburb is, with how chip heavy and manufacturing heavy, it's still extremely diverse. Yet we have a housing shortage. So you can see here that our housing inventory, despite massive population growth, is still at the same levels as 2019. Very scary, very scary. And that's of course before all these new jobs come online and people move for them, even though the labor force continues to grow at astronomical paces. And of course, unemployment rate is remaining at pre-pandemic levels, very strong, but prices continue to rise. So again, you're going to see very, very consistent trends here. So let's talk about what's going on with the fund and a little bit more about specifics. Kathy, I'll let you handle this part and
Sure.
then I'll talk about some recent purchases.
Yeah, so we are, as I said, closing the fund February 11th. You have to have all your paperwork and funds in before then. So don't wait till the 11th, it'll be too late. But the specifics about investing, minimum investment is 50 units, which is $50,000. Total offering max 20 million. Minimum raise 2 million. We're of course beyond that. Deadline February 11th, and it is accredited investors only. We went over that, or Leah did earlier. How the money is distributed, obviously as the funds come in, Leah runs out and buys properties and she wants to do so many more. So it's frustrating, I know. I really, honestly, the biggest issue people have today is how do they find deals, and you are swimming in them. It's really amazing. So we're going to talk about some of those. And that window may close the more that people know about this area, and as rates come down. We had perfect timing the last year, and probably, closing out at the right time as more and more people drive prices up, and the assets that we already have. But the way that you'll make money is initial cash flows are treated as return of capital. And then after your capital is returned, 75% of company profits to investor members pro rata. Distribution details. All distributions are made at the manager's sole discretion after expenses, fees, and allowing for any reasonable reserves. Investor distributions are paid pro rata, as I said. The manager expects to provide quarterly distributions starting 2 calendar quarters after funds are deployed. And in order to give preference to early investors, we had a question about this, like, why do I have to wait? If I'm investing my money now, why do I have to wait 2 quarters? But here's why. Each investor member will start sharing in profits after you've been a member for 2 calendar quarters. The reason is people who put their money in already, we've had to purchase those properties, renovate them, put them on the market for rent, and there's a delay there. So if you come in and you just start making the profit right away when they had to wait, it's not fair to earlier investors. So our attorney advised us that this is a way to sort of make up for that. But it's still a great time. A great time to get in because most of the acquisitions have already happened, and it's close to being stabilized. All right, I'll hand this back to you. The question we get all the time, where specifically are we investing? And here it is.
Yeah, so you can see kind of this chart. I have marked red in my no-go zone. These are areas I refuse to invest. Green are your real high growth areas that are past the point of affordability. So this is going to be, again, those inner city suburbs we talked about. And the stars are all of the areas that we're around, kind of piggybacking on this area. And the star right here, if you look kind of right here, if you can see my pointer, that is Sherman and Denison. And so that is kind of our big hub where we're really focusing. So we bought, I think, 7 or 8 properties in January. So we have been just packing it along this month. I believe, out of funds to use. I think we about have enough for one more. So I'll probably acquire one more
coming in. People just filling out the paperwork. Yep.
Yeah, so I've been using them as quickly as I can, obviously making sure we're buying right, buying great properties in these areas. Very excited about the portfolio that we've built and how much equity I believe is in them relative to what we're in them for. So we have 47 properties that have closed, and you can see the breakdown here. We have 14 in Sherman, 19 in Denison, 4 in Bonham, 2 in Whitesboro, 1 in Farmersville, that's Collin County, 1 in Leonard, 2 in Gainesville, and 4 in Greenville. So all around this high growth area. So let me tell you just a couple of our acquisitions lately. So this one is in Denison, and this property is a 3-bedroom, 2-bathroom, just over 1,300 square feet. This one we bought, did quick repairs. It rented almost immediately, and we got $75 over my projections at $1,550, and that tenant has moved in. Super cute house, super, super cute house. All of these are finished to high quality standards so that we attract the right tenants and that they stay. And hopefully we're not having to redo those finishes before it's time to sell in 5 to 7 years. So this one is in Whitesboro. This is a hard market to get into, pretty expensive. I'm actually looking at doing some development deals out here to sell on our retail side, and it's just very hard. There's just not a lot built out here. So anytime I can get something in this area, I love it. It's just really expensive. So this is a 3-bedroom, 1-bathroom, 720 square feet. We bought this one for 83. We spent about 35,000 in approximate rehab, all in under 120. This one also leased 50 over projections at 1250. Both of these tenants just moved in the last week or so. Another just super cute house, looks great. And then this one is in Bonham. So Bonham is unique. It's about 20 minutes from Sherman, and it has Boydie Ark Lake, and they just finished building out this new area they dug out. So this is another main reservoir, and it provides millions and millions of people with water in DFW. So this area is not only recreational, but has major money pumping in because of that. As DFW grows, we have more water needs. And so they just dug out this massive reservoir, and we've seen Bonham just explode because of that, because it's so easy to get into the city or to get into Sherman. So this is a 2-bedroom, 1-bathroom. This one's 828 square feet. We bought it for 62. We spent about 51 in rehab, so all in about 117. And we just approved an app at $1249, so that's $89 over projections. Again, another super cute house. And you'll notice a theme. They all look pretty similar because we use just about the same finishes in all of them. This is another one I just bought in Bonham a few days ago. I think we closed this one maybe Friday. This one is just unbelievable. I saw this one come across my desk. I'm like, me please. 3-bedroom, 2.5-bathroom, over 2,000 square feet. We bought this house for 100,000, estimated rehab about 58,000. We bought this one under $49 a foot. Under $49 a foot, just unbelievable. And they've already started the work, which is why this rehab is still really reasonable despite its size. So my internal team is doing this one with a few subs for some of the trades, and I can't wait to get this one on the market. It's just incredible. So we did do BPOs for the first 18 properties. That was done by a local unaffiliated real estate agent. And based on those first 18, he believed that we had about 944,000 in equity between the difference in what he felt they would list for and what we actually are in them for. So our average equity on these is about 25.69%. That's pretty consistent with where I believe the numbers are. And of course, you know, I am a real estate agent, but I can't make a guarantee of value. But what I can say is I have made a point to make sure that we are buying these far below what I believe they are worth, which is great because that's all stuff that we're going to share in when these sell. So very excited about the portfolio we've been able to put together and excited to do these last few before we close out.
Okay, so the basic fund overview is we are, you just heard it, buying 1 to 4 unit properties in rapidly growing markets throughout North Texas with cash. And if and when interest rates allow, we would refinance the portfolio and buy more. The target return is 8%, time frame 3 to 7 year hold. And I want to just clarify that that 8% target return is not cash on cash. That's including equity capture, which would be realized upon the sale of properties. It's a conservative estimate. But the cash on cash return somewhere around 4 to 5%. So wanted to clarify that. Time frame 3 to 7 year hold. I'm going to say count on it being the longer hold because there's so much growth happening. I don't think any of us want to get out before that growth really pops. So it's going to be like a couple years before those, you know, for the TI is finished, right, with their
I mean, I don't know how long the 4th factory is going to take. I know the first one's going to be online, which is great, but I mean, we're probably talking another 3-4 years.
Yeah, so we want to wait at least that long, but probably, I'm going to say probably closer to the 7-year mark. But the time will tell, and Leo will know. If we get a ridiculous offer, we'll probably take it. So.
Yeah, and one thing I would also point out is we ran this as cash underwriting with the very conservative numbers because we knew the climate we were going into. We knew interest rates were going up. We didn't know if we were going to be able to refinance in a reasonable period of time. It is my intention to go refinance these back out. I've already got 2 banks willing to do it. I'm just waiting for rates to come down. And if we do that, of course, then the cash on cash return does increase based on leveraging, but we wanted to be very conservative. I also do believe that we've been able to capture a lot more equity than what we underwrote in the transaction. But again, Kathy and I both wanted to be conservative because of the market time that we were entering at the end of 2022 in December.
It was pretty unknown time, but we both were pretty confident. Like, yeah, what we do know is there's going to be demand for affordable housing, and yeah, that's what this is, and in growth areas. So portfolio stabilization, it's a great time to join this fund because a lot of the properties have already been purchased. 28 are rented, 8 are on the market. They're ready to go, ready for rent, and 12 under construction still. On average, it's been taking 4 to 6 months, but sometimes no time, right? Sometimes you're buying already rented, ready to go, and then you kind of came to me with some whoppers, some deals that were going to take a little longer to renovate, but would be worth it because of the equity gain on those. So we just made that exception. Like, okay, if we're going to make that much money on the front end, let's do that. It's okay if it takes longer. So that's the average, but like the recent acquisitions have been already rented, so immediate
Yeah,
stabilization.
so like the 7 that I just bought, 5 of them were quick ready or already occupied, and 2 were just 2 or 3 week rehabs. That bottom one I just bought, that one probably is going to take a couple of months, but that one I anticipate, and again, this is just my guess. You don't take this to heart for any hard firm numbers. I think that property has over $100,000 equity in it when we're done. So I mean, there's some like that are just absolutely incredible.
Yep, worth the couple extra months that it took. All right, so for more information, visit growdevelopments.com. You can reinvest if you've already reinvested, but you have to fill out the paperwork again. That's just how it works. The minimum investment, as we said, is $50,000, although we have accepted some, on some occasions, $25,000, especially if you're a new investor and want to just test us out. Total offering max, $20 million. Offering close date February 11th, as I said, but get your paperwork in early because then you still have to fund it by that date. And accredited investors only. So I'm going to take this time to answer some questions. A couple came in right before the webinar.
Can I point out one thing just real quick before I forget?
Yeah.
February 11th is a weekend, guys. So you need to plan on your drop dead date being February 9th, which is the Friday.
Very good point. Thank you. Thank you for saying that. Okay, so one question was, we already answered it, and if an investor invests now, why don't we get to receive income now? And it's basically just not fair for the investors who have already been in, who had to wait for the acquisition and renovation of those properties. So that is what we were advised by our counsel, to begin distributions in the third quarter that you're in the fund. Is the 8% annual income estimate calculated from when the investor provides their funds or only after the investor starts receiving income? So there is no preferred return on this. When you invest in a syndication with a preferred return, read the documents, but generally that preferred return starts the day you invest. This one, we're sharing, you're investing right alongside us. So first funds out, first money that comes in and profits goes to you to pay back your initial capital, and then after that it's split 75-25, 75 to you. So that's the difference. That hopefully answers that questions. And then the third question from this particular person was, what are the chances that the fund just keeps buying properties or doing 1031 exchanges so an investor can't get back their original principal? That's not how this works. As I said, I guess cash flow comes in after fees paid. It goes to you. So we don't get it till you get your capital back. So that's just how this one's written up. Every fund is different. We can only buy properties when we have the money to buy them, and we are closing the fund. This is one of the reasons why we have a closed-ended fund, a closing date, because there are other funds that stay open and then they're constantly taking investor money in. So there is no sort of end date, and that's, I'm not saying all, definitely not saying all, but it's easier to become a Ponzi scheme if you have an open-ended fund where there's never a close date, because new money can come in to kind of take care of problems. I didn't want to have that be an issue and whatever. So it closes out on the 11th. That's it. No more money. So we can't keep buying properties if we don't have more money. So hopefully that answers your question. The only way that we could is if we refinance and buy more properties with that money.
The one thing I will point out is anything that is sold before month 36, which I don't anticipate we would have anything, that is allowed to be used to buy more property. But anything we buy after year 3 is sent back as capital payback. And so that's handled under the disposition. So really up until year 3, that's kind of that time window. We did have some of the properties that came with extra lots that we sold lots. We did use a lot of those proceeds to buy more property, but the last one we sold, we did distribute that out as capital payback. So there's that opportunity as well.
Yeah, that's been just amazing. Something we hadn't really planned on, that you could split the lots and sell them while we still get the cash flow. Okay, so now some more questions here, and add your questions in on the control panel. Um, what is the fund level net cash flow and cash on cash return for Q4? We are not completely stabilized yet, so we don't have those numbers for you yet, unless you want to speak to that.
No,
Leah.
and I don't even think I think we're just now finalizing Q4. But if you go into the PPM, it has all of the numbers there for you and information.
Yeah, so as we said, we're projecting cash on cash of 4 to 6%. We have started distributions. You have split some lots and paying using that to pay some capital back. But until everything's renovated, we're still in this. We're still getting money. We're still buying. It's all in flux. It's kind of like if you've been in an apartment syndication, you don't get any distributions for a couple of years. That's, all the money is just going into renovating. So we're kind of ahead of that because we've already done distributions, but we're
Like
very much in stabilization mode, buying,
we bought
renovating.
7 this month.
Yeah, yeah. So we'll have those numbers soon though.
Mm-hmm.
For houses which have finished renovations, what's the vacancy rate and how long do they sit?
So we're actually listing most of these as they are completing renovation, so they're not sitting. And so that's one of the ways that we do things a little bit different. And then we had a few where we bought tenant occupied and we did minor repairs between tenancies, and even most of those were pre-rented before that point. So aside from the ones that are still finishing renovation, I think we only have 1 vacant that is finished.
Okay.
Yeah, we had a ton that just finished in the last 2 weeks.
Are there private equity companies that have invested into the fund? No, we did not set it up that way. It's just individual investors. Total money committed, I think we're close to 8 million. Does that sound right? Yeah. Okay. In OmniKey website, there are at least 51, if not more, active for lease listings in Sherman. How long have they been on the market, and is there really demand?
So Sherman is a city of 45,000 and 50% of them rent. So, 51 listings is not very much. Average days on market in Sherman is pretty short. So not a concern. And again, we have something like 20,000 jobs coming into Grayson County in the next 12 months. So the fact that we're already in a housing shortage before this happens really just tells you how insane what's happening is.
Someone said, Kathy, I'm a new investor. How do I become accredited? It's very simple. You don't have to take a test. It's just based on your income or your assets. So there's 3 ways, as we mentioned, to become accredited or to be considered accredited. And that is either you have $1 million net worth excluding your home equity, or you earn $200,000 or $300,000 if you're married. And the third way, and you can meet any of these requirements, you don't have to meet all of them, just one of them. The third way is to have a securities license. It's Series 760. It's on that first page. I don't have it in front of me, but go back to the beginning, or Jill, if you want to go back to that page on how to be an accredited investor. One of the easiest ways to do it is to just go to verifyinvestor.com. Verifyinvestor.com will ask for information. You just need a third party basically to verify that you are accredited, and that can be your accountant can provide that. Your financial planner has to be certified. Financial planner cannot be a related person, has to be a third party, and that is how. Or if you're going with the income qualification, then you would just show your W-2. So our team, let's see, it's right at the top.
And then I'll add one thing while I'm finding that. I just pulled my active listings for my entire company, OmniKey, and we have a total of 5 listings on the market in Sherman for rent.
Yeah, okay. I was wondering, I kind of wondered about that as well.
Yeah, that didn't sound, well, I knew it wasn't ours, but yeah, there's not that many on the market. And of those, I think only 2 do not already have applications. So.
Okay, yeah, that I was thinking the same thing. All right, so again, here's the eligibility. Check that out, and you can go to verifyinvestor.com for the net worth piece, and then for the income piece, if you want to do that instead, you would just send your W-2s. So we know.
You can also ask your CPA. Like I invested in the fund, and I just emailed my CPA and said, "Hey, will you send me a letter that I'm an accredited investor and fill it out?" and he did.
Yeah, that's how we do it too. They just send a quick letter. Not every CPA will do it though. So, it just depends on your relationship.
Mhm.
Is the 8% the actual return? This is our projected return. We won't know the actual return until we sell everything, and that will be in 5 to 7 years, probably 7. So we went through a very detailed model that we had our underwriter create. It is very complicated, but we plugged in all the projections, the sample properties. When you're starting a fund, you don't know what you're buying and you don't know how much it's really going to cost to renovate. You can estimate, and that's all we could do. So with our very conservative estimates, we were targeting the 8%. It could be more. Right now we're on track for that based on everything we've done. But if things take off the way we think they will, and we didn't want to put that in the underwriting, but if it goes the way we think it will be higher, right? But this is conservative. Anything you would say about that? Like
Yeah. I
what's been
think
the appreciation rate late, as of the last 5
yeah.
years?
So I think the way that we underwrote it, and again, we wanted to be conservative, but I believe most of these have almost the amount of equity we underwrote for most of the duration of ownership already.
Yeah.
So yeah.
And typically it's been, 4 to 5% appreciation, but in the Dallas area, much higher.
Mhm.
So we're not going to guess and speculate what we think the appreciation will be, but I can tell you from my experience, when you go into a market that is growing at the rate that this area is, with all the new freeways, let's just give an example of some of these new home developments you were showing nearby, these really fancy ones. What do you think the cost of a house is going to be on those?
Well, I can tell you, Sherman and Denison have put things in place, Denison specifically, to make sure that nothing under 350 is being built. And their comments to me have been, and to all of the other developers in this area, we don't want anything under $500,000, period. And they made a point in their press releases to say luxury single family homes. In fact, they've added what's called impact fees now that are going into effect in just a few days that are tens of thousands of dollars for any infill or entry level home built, and these lots that are being split up to try to dissuade any cheap homes from being built. So they are punishing the builders where most builders are pulling out of Denison completely, unless they're one of these big conglomerates doing these luxury developments. So they want $500,000 plus, and they are making a point to make sure everyone knows what's coming in is, quote, luxury.
So the city planners are trying to make it a super high-end area. It's
Because
not
they
going
know
to
the
be
jobs that are coming in. Yeah. So when I go back that I met with them, 5 years ago, 7 years ago, when we started out there, they're like, oh, you guys are great. You're buying up all these old drug houses and, we want them out of here and all of this. And now they're all gone, right? And they're like,
Yeah.
oh, thanks for what you did, but we don't want to sell to you anymore. We want expensive houses. And the way that they tried a couple years ago, they started this dialogue when things really started going crazy, when TI announced. And their argument to me was they had too many kids on free lunches. Like, seriously? But yes, they are basically trying to stop all entry level builds, which, guys, this is how we got into this mess in the first place 45 years ago when they stopped building entry level homes. These cities want big, expensive houses because where does the tax dollars come from? You look at areas like Collin County, where I live, where they have record tax money coming in. They've got this massive spending surplus. We just had the huge property tax reduction that's, reducing property taxes for homeowners and investors alike. And what does Collin County do? Do they pass along tax savings to their clients and to their people who live there? No, they raise taxes. So much so, my husband, Michael, is so furious about it, he's running for county commissioner. It just doesn't make sense. But this is how these counties and these areas work. They get a taste of a little bit more money, and then, well, now they want even more money. And so it's a problem. It's really good for us, right? Because it means that we're going to be competing against similar sized homes that are twice the price of us. But as a consumer, as someone, I say a lot, I have kids, right? I want my kids to be able to have affordable housing because I know not all of them are going to live like I live, right? And unfortunately, that is just something that I think is not going to be a reality, and certainly not over the coming years in North Texas. I believe we will be little LA and try to find affordable housing in LA. It just doesn't exist.
Well, it's really sad. And it's for me, this is also a mission type work of, I'm so glad we're doing it. There's a couple of reasons. These are older homes that need renovation. They need repair. A first time buyer couldn't buy it because the bank wouldn't lend on some of these in the condition that you get them in. So to be able to take old, old supply and make it new-ish and a really nice, safe place for people to live that's affordable makes me super happy. It's what we've been doing for 20 years at Real Wealth. But it's just so strange. I mean, you need workers, you need workers in every city and they have to be able to afford to live there. So
Well,
hopefully some of these higher end developments are going to provide, at least in California, you have to provide 30% of your development has to be affordable. No, it's Texas, you do
this is
whatever you want.
Texas, Kathy. That's like saying we're going to have rent control. No,
Yeah.
what they are looking at is almost 50% of new incoming jobs are 6 figures plus, and less than 17% make 75,000 or less a year. So what's their incentivization? They know these people make good money. I mean, even myself as a business owner, we're paying more for entry level jobs than we ever have before. I've got a team of almost 50. That's just the world that we live in. And certainly, these markets, as they go up in value, pay rates go up. But the difference is North Texas has still remained really affordable. I mean, the fact that we have homes we're renting out for $1,250, $1,300 that are cash flowing great, that alone says how odd and how undervalued our market is by market size. So, the potential I see for growth, I see for appreciation, but I also see that we are just naturally undervalued. And that's the scariest part, because minute rates drop, what I think is going to happen is we're going to start to kind of reset like we did 3 years ago, and people are going to be blindsided overnight. It's not going to be a slow, progressive kind of gradual growth. It's like, bam, it's here. And that's really what we're looking at. So yeah, these housing developments, what they're doing is they're building apartments. Everywhere you go, there's apartments. And Grayson County has almost no apartments. It's been a huge problem for them because they weren't building, the builders were building down in Collin County because they could charge twice as much. And those luxury apartments are renting for, $2,000, $1,800 a month. It's crazy. So they really have to catch up on the multifamily game. And that is why there's such a housing shortage, even beyond the norm in Grayson County, because there just aren't apartments. In fact, they're so proud of their one apartment development up there that's recent. That's the one thing they talk about when they talk about multifamily housing. We're doing a new phase of this development. You have one apartment complex, and to serve 100,000 people, it's a problem.
Okay, you're going to like this next question, Leah. The question is, will Leah and Kathy consider another fund? I would tell you guys.
Email her, tell her. I keep telling her we need to keep going.
Leah's been bugging me since November saying, can we get the next fund? I'm like, this one is still going till February. Just let's hold off. Yeah, of course we are. Of course we are. We just wanted to get this one, focus on this one, get it stabilized, be able to tell you the return. Of course, the next fund's going to have a different projection because it's a different market. We just came out of an incredible window of opportunity when so many were panicked and scared. Leah, just go over it again for anyone who's new, what the last year was like in acquisitions versus the years prior.
So it's actually the same right now, which is why I've been begging Kathy to do it. The problem is people don't have access to money. So your traditional real estate rehabber is a regular mom and pop individual who doesn't have a lot of cash, who uses something called hard money. And what that means is that they buy a property with hard money at a ridiculous interest rate, and then they have to wait to finish their rehab and then go refinance into a conventional loan, a Fannie Mae, something like that. And so when rates were low, it kind of made sense. The problem right now is that not only are these hard money lenders harder to find, their money is ridiculously expensive, and people can't qualify on the back end because of the new mortgage payments. So these properties that typically would have 10 to 20 people who watched HGTV and think that they can do what I do, they're all on the sidelines because they can't make the numbers work. And why can't they make the numbers work? They can't even find anybody to do the work because they hire people and then they disappear because there's such a shortage of vendors. And so that is the reality of what we've been dealing with the last year. Well, I've already been doing this for 7 years. I've been buying, renovating dozens and dozens of properties. I own 40 million in real estate. This is nothing new for me. So we basically I halted buying and subbed in the fund properties in its place. And so it's an incredible time if you have money and if you have the people, because at the end of the day, the property can be great, but if you don't have the people to make it happen, you will never have a good investment. And that's really a problem that I'm sure you can resonate with if you've ever hired a vendor for your own personal home. They're only good until they're not. And so I think that is really the biggest problem right now, cost of service and cost of lending. And that has not changed. As rates come down, it will start to change, but a lot of these guidance line, build lines, the lines that these places use to lend out money, they're not gonna go back down cheap. So like I have a guidance line and I'm locked at a really low rate. They're not going to do that again. They're not going to lock in because they saw how quickly it went up. They're not going to have those available again. And I don't think rates are going to go down that low again. I think that was a one and done. That was incredible. We're going to be talking about it in 30 years. Like, oh, remember that time that we got 2% interest rates? So at the end of the day, it's about having the team, having the access, and our reputation up in this area, really this whole area is so big and so great that I don't have to go find these deals. They come to me. And that really is key. Having a name that was built long, long before this because of high volume buying, I'm getting access to properties that you just don't find. And I don't have to do the marketing either. There's no cost for that because they're calling me, they're emailing me. It's a lot of elderly people that we buy from. We have one of our properties we bought with someone who was in kidney failure and needed to get rid of her property so she could afford a kidney transplant. Like we've had some really incredible stories where, yeah, we got a great deal, but we also helped someone who really needed out of that property. And so there's kind of the feel good with that too.
Okay, but like a couple of years ago, if you were trying to get a property from a wholesaler, they wouldn't call you back. They had plenty of other buyers. And now they're now they're hounding you, right?
Well, and the funny thing is, like, I'll have one that I get outbid on because someone outbids. And then 3 weeks later, what happens? They don't close. They call me. They're like, hey, remember that one? I've got 4 days left on my contract. Can you buy it? And so a couple of them, that's exactly what happened. They're ones that I wanted. I wouldn't pay what they wanted. And they came back because
Nice.
even the people they do have, a lot of them can't close.
Right. Are you concerned about higher property taxes in the future?
No. No, and I mean, we're protesting these, and then we just had property tax reductions that went into effect with this year's tax bill. It passed our governor, our state senate, our state house, and then voters voted it in November. So our governor is on a path to reducing property taxes completely. I think that's going to be a longer term path, but the bottom line is that it took like only 30% of our massive surplus to do this widespread property tax and business reform, and this is just the beginning. So although we did underwrite property tax increases into our model, I'm not concerned about it because if the property taxes go up, that means the value's gone up, which means all of us are making money. So that's not a negative for me.
Okay, great. There was one more question about, are you sure that there's not more listings on your website in the area than you said? So I don't know where he's looking or what website.
You're
I'm not
probably
sure.
doing a search for the whole area, not just mine, which means that you're pulling up all the apartments, you're pulling up everything on the market, but there is absolutely not an abundance of housing in Sherman, I assure you.
12:54 p.m.
Okay, so maybe you guys can have that discussion offline because
Feel free to reach out to me. I'm happy to send you the exact list of listings that my company has right now. In fact, we are about 70 properties below what we typically are for this time of year for size of our portfolio, because we do 2-month re-renting periods. So anyone who's moving out in the next 60 days, their property's on the market. And as of today, including all of our multifamily, I have a total of 121 units listed, total. And that's across DFW and Houston.
how do you screen tenants to avoid evictions and also to keep people there longer?
So the fund has been operational for 13 months, and we have never had a tenant that held a balance through a month. So obviously we're doing something right. We go back about 30 years. We look for eviction filings, eviction, even if they didn't get evicted, if they just filed eviction on them, because apartments will do that a few days in. We look for bankruptcy history. We look at pet history with previous landlords, credit, criminal, you name it. We go very thoroughly back. And if anyone has so much as a blemish, then we'll even bond the deposit up if we choose not to reject them. So, you know, there's no guarantee in life. It's just like anything in real estate. There can always be risk. There can always be loss. But if you do proper screening, most of the time you're going to be able to dissuade those who would do that. Because if you're going to get evicted, generally you've been evicted before.
And you know, eviction is part of it, it's part of real estate. So there could be some. I don't want to say we're not going to have any evictions, but you know, let's talk about how the process of evicting in Texas. This is probably someone from California who's more concerned about it because it's so hard to do here.
Yeah, so basically our lease overrides property code to 1 day notice. So if they don't pay by the 3rd, we send out notice on the 5th. We could send it out earlier, but we try to give them a day grace. And then once they receive that notice, I can file 24 hours later, and the court has to hear it within 14 to 21 days. As soon as they hear it and we win, they have 5 days to get out. So it's a 1 month process max.
If they don't get out, what happens?
Well, if they don't get out, then we do what's called a writ of possession, and the constable meets us there with movers. Very simple.
Yeah, I remember like this. These are things that don't happen in California. Like literally,
Yeah.
they just come in and remove you. Like you
Yeah,
don't get to
no,
stay.
literally, I've had them carry people out kicking and screaming. But writ of possessions are not common here. Certainly not in the single family space, more so in the apartment space. People don't want to risk it because the constable just puts your stuff at the curb, and then people will literally line the street waiting. And so when the constable pulls off, they'll come take the stuff off the curb. So it's very, very rare that a property gets to a writ of possession. I had
Because
one
it's,
time where the tenant had like big screen TVs and really nice furniture, and they watched the papers for these, and they had a whole line of vans just waiting for the constable to leave, and they started loading up this guy's stuff. So again, people don't want to get to that point. Most of the time, they don't even get to court; they just take off.
yeah, as I recall, and this was years ago, so I wasn't sure if it had changed, but it just becomes public property, right? So they just put your stuff out and people come take it.
Yeah,
Yes.
24 hours later, we have it just trashed. Literally, we don't even have to store it. There's no storage requirements here.
Okay, there's a bill in Congress to prevent investment companies from buying and owning single families, also to phase out their ownership in 10 years. Will this affect you? That's for much larger. I can't remember what that bill said, but I think it was like 500 properties or more. I can't remember. I'd have to look it up. But when I researched it, it didn't look like it would affect us, and I very much doubt it will even go through. We'll see.
Remember, that's where your congressmen make their money is in real estate. That's why they don't disband 1031s.
Yeah, exactly. Yeah, very, very unlikely that's going to pass. I mean, who's going to provide housing? Is it going to be the government? You want the government to take over the
That's
rental?
what they wanted. They had the bill where the government needs to own what, 25% of.
Yeah. The government has owned affordable housing before and still does in some cases. Doesn't usually go well. Doesn't usually go well. They made a very clear decision that, hey, let's put this in the hands of investors. We'll give tax incentives. Why do you think there's so many tax incentives for being an investor? They want us to do this. Otherwise, people rent. There's no shame in renting. My daughter rents. I rented. It's part of some people. It's been 60-40 basically, 60% ownership, 40% renters. And there's people who just never want to own a home. So there's no shame in renting. It's just, who do you want to be your landlord? Do you want to be the government, or do you want it to be a professional investment company or a mom and pop? It's, again.
Even Section 8 works with landlords. I mean, even the government doesn't own those.
Yeah. Yeah. Okay. Let's see. Someone said you're lucky where I am. You have to keep tenants' possessions for 28 days. Wow.
The expensive
Amazing.
part is not the storage, it's the moving it. It's the physically boxing it up and moving it and cataloging it. My answer to you would be, you probably don't want to own in that state.
Right. This is one of the, there's so many factors to investing, but the process of evicting is a huge one. You be in a landlord-friendly state. Be in a state, if you have a business, be in a state where they want that business. Don't be in a place where they're trying to shut you down. And that's why I don't invest in California for long term. All right, if you want Leah's contact information, just go to realwealth.com and you'll see on the, once you join and log in, you'll get all her contact information there. And if you want to find us for the fund, it's growdevelopments.com, growdevelopments.com, and you'll be able to get all the information. It says invest with us, and it'll take you to our Invest Next page, and you'll get all the details. Leah, thank you again. It's been an hour. It went by so quickly. You're always so fascinating, just incredible. I'm so honored to be a part of this with you. And of course, we're going to do another fund. All right. It may or may not be, it's going to be different than this one. So if you like this fund, get in before the 11th. All right. Take care, everyone. We'll see you later. Bye-bye.